everybody, and welcome to our discussion on the overall cash budget. With this budget, we're going to take the cash receipts budget and the cash disbursement budget, bring them together, and we're going to add a few pieces in with the minimum financing levels, minimum cash levels, and how to finance that. So before we get too far into the actual example here, I wanted to mention that the cash budget is similar to the statement of cash flows, but it's not exactly the same. We don't have the breakdown between operating, investing, and financing, but it's close enough. It explains how the cash has changed. So even though we do have other financial statements like the balance sheet and the income statement, this is one we generally don't see broken down in that detail. Now, the cash budget itself is considered an operating and a financing budget. Of course, it's more on the financing side, but every budget we've talked to up to this point has been the operating type budget. Now we're shifting gears into the financing budgets. The other thing I wanted to mention again is that it's not just the cash receipts and cash disbursements budgets. It's not just those merged together. That's a big portion of it. But we also have to take a look at what is our beginning and ending cash balances. Do we have a minimum required cash amount, and we'll borrow if we need to hit that amount? Even though that seems a little unusual to borrow money when you still have a positive amount, companies do it quite frequently to make sure they have a set amount just in case of any unexpected requirements or payments that are due, something like that. So we'll talk more about that. This budget does tie to the balance sheet because we need the beginning balance from last period's balance sheet, and this will bring us the ending cash balance for this period's balance sheet. So here's the overall master budget, the view we've been looking at up to this point. Up to this point, we've covered all of our operating budgets, and now we're talking about the cash budget. You can see that there's a linkage. Well, first of all, there's a linkage from a lot of these budgets into the cash budget, and there's a linkage out of the cash budget to the budgeted balance sheet. Cash and income statement really don't have a direct correlation. It's all about timing, but these do tie to the balance sheet. So here we have the overall cash budget. This is where we're going to spend most of our time in this video. We have the 3 different months of the quarter and a quarterly total. You'll see we have the beginning cash balance, which we would have had to get from March's ending cash balance, or the balance sheet for March, the ending balance sheet. Then we're going to bring in our cash receipts for each of these months from the cash receipts budget that we've already talked about. That tells us the cash we have available for any given month, but then we have to subtract out the cash payments or cash disbursements from that budget, and that'll give us an ending cash balance before considering any financing effects. So in April, we have $104,370, which is well above our minimum cash balance of $20,000 that we want to make sure to always hit. So that tells us we're $84,370 above where we need to be. In other words, we don't need to borrow. We're well above our $20,000 minimum, so we don't have to borrow. There's no evidence anywhere in the problem that we had loans from last period, so there's just no financing impact here. We end with $104,370, and we carry that forward to May. We're adding in May's cash receipts to get a total available for May. We subtract out the cash disbursements for May, and now we see we only have $76.60 left, which it's still positive. It's still a good thing, but we're below our minimum $20,000 by $12,340. So we need to borrow money. Based on this company's policy, they want to make sure to borrow enough to hit the $20,000 requirement. So we need that $12,340 just to get us to $20,000. So that tells us we're going to finance $12,340, and we'll end up with exactly a $20,000 balance. Now, the one thing I want to mention here, a lot of these textbook problems will say maybe we only want to borrow in increments of 1,000, or it's usually 1,000. That's the ones I've seen. So it's not just simple rounding, round to the nearest 1,000. You're always going to have to round up because you need to keep at least a $20,000 balance So in this case, they'll tell you go ahead and borrow $13,000, so we're at least above $20,000. The other thing you'll often see with these types of problems is that they have to give you an annual interest rate. By the way, for this particular problem, it's 12% annually, which means it's 1% per month. That simplifies the problem. But what they'll also tell you is that we make our borrowing at the beginning of the month and we pay it back at the end of the month. That's just to simplify your interest calculation so that you know it's always a full month's interest. There's never partial months to worry about. Now we're going to pay this back, we don't know, maybe June, July, August, whenever we have enough money to pay it back without going below our $20,000. So here's the $12,340 we borrowed. We ended up with exactly a $20,000 cash balance, and that carries forward to June. We're going to add in our cash receipts for June again to get cash available. We're going to subtract out our cash disbursements for June. And now we have a balance of $46,860, which is above our $20,000 minimum by $26,860. We're well above the $20,000 minimum. Since we have so much extra money, we can pay back our $12,340. But we're going to pay it back plus interest. We have 1% per month, I said, and we've only borrowed it for 1 month. So what we're going to do here is borrow the interest is $123. It's 1% of that. So in total, we're going to have to pay $12,463 of financing. We had $26,860 extra, so we had plenty of money to do that. You know, the total we had, it was $46,860. We're paying off $12,463. That brings us down to $34,397 at the end of this last month in the quarter. So that's also the ending cash balance for the quarter. Notice that for the quarter beginning, we have to go to the beginning of the quarter, which was April. So this is not a total. These quarterly balance numbers are not totals. They're beginning or ending. So $34,397 for that one. That takes us to the end of the cash budget. So hopefully this has helped to clarify this type of topic if you see these problems out of the text or if you deal with it in real life as well. But again, I hope it's helped. I look forward to talking to you at our next sessions, and I thank you for your time.